What's up, everybody? Today, we're going to be talking about something super important, which is how to analyze a company. How do we decide which stocks to buy, which stocks to pass on? Now, there is no one-size-fits-all one way to analyze a company, but I'll show you what my process is, what I think is important. And a viewer asked me in a recent video what my thoughts were on NOMD Foods, ticker symbol NOMD. Now, this is a company that I was not familiar with. After quickly looking into the company, I thought that this would be a great example of a stock to use for this video to show you how I try to find deep value stocks. The first thing I want to know is very simple. Just what does this company do? How do they make money? And we see here NOMD Foods is an American-British frozen foods company. Very simple. They sell frozen food. Easy company to understand. Now, we could do a much deeper dive on specifically where is their money coming from, but the thing is, I don't even know if this company is worth my time right now. So for me, what I do is I just put the ticker into my sheet, I hit update, and this sheet is going to scrape a bunch of fundamentals about the company over the past, 15 years or so. There are simply thousands and thousands of stocks that we can invest in. You cannot spend an hour, 2 hours just doing a deep dive analyzing every single one. I'm trying to find a reason to pass on this company right away. Warren Buffett has talked about investing like being a batter, and there's all these pitches coming at you, just hundreds and thousands of pitches just coming over the plate. And there's no umpire there who's calling strikes. So you just get to sit there and wait and wait. And if a pitch looks pretty good, but if there's just something about it that you don't like, you don't have to swing at it. All you have to do is stand there and just wait for the perfect pitch to come right down the middle, and then you swing hard. So if there's something about this company that is just off to me right away that I just don't want to invest in, I'm just going to pass. Like, for example, if margins are just being crushed and coming down while revenue is dropping, I'm just not interested. If the company's trading for, like 40, 50, 60 times operating earnings, I'm probably just going to pass. And yes, I am going to miss some great companies this way, but I'm also going to save myself from just a bunch of horrible investments, and I'm going to save time so I can focus on the companies that are really deep value. Now, quick glance, this looks reasonable. We've had about 6% growth on the top line over the past decade, and right now the company is trading for just, about 10, 11 times operating income. The operating margin looks like it's pretty steady. So, I'm still interested. I'm not going to say no right away. Honestly, with most stocks, with, 80, 90% of stocks, at this point, I'm able to just discard them. And that's not me saying that, I think that they're going to be horrible investments or anything like that. It's just I can already tell that they're not going to be a fit for me, that I'm going to want to spend my time looking at something else. Now, we can see that we're missing data here from 2012 and before. We're missing some data from 2014. So I'm going to guess that this company went public in either 2015 or maybe a little later. And indeed, if we zoom all the way out on the stock chart, we see it went public in the very beginning of 2016, or at least that's when it started trading on the New York Stock Exchange. Maybe it was trading publicly on some other exchange. We see it's a British company, so maybe it was on the London Stock Exchange prior to this. I'm just going to hide these rows, clean up my sheet. Now, at some point when I get enough subscribers on this channel, I'll probably put this sheet up for people to grab somewhere. I just haven't gotten around to it. There are free options that you can use to look at data like this. Like, there's macro trends. There's also a site called Ticker that will give you, I think the last 5 years for free. And here we see on Ticker that NOMD Foods, their forward price to earnings, forward price to free cash flow is between 8 and 9. So that's really low. Already in my head, I'm just doing a quick back of the envelope calculation, and I'm saying, if we have a 12%-ish free cash flow yield, plus they got 6% growth on the top line going forward, then even with no multiple expansion at all, I could be looking at about 18% annualized on this stock, which would be an excellent return. So I'm interested. And now we got to dive into the company. And usually the first place I go to when I want to look into a company is the company's own investor relations page. I want to see how the company presents themselves, and I want to look at their most recent presentation if they have one. And on their website, when I go to their brands here, we can see what they own. Bird's Eye, they say, is the UK and Ireland's leading frozen food brand. Findus, another frozen food brand here. I'm not familiar with this. I'm just going to click around. Let's go France. Products. Okay, lots of fish, pizza. Okay, all sorts of frozen food. This brand Igloo, largest frozen food brand in Germany. And they say that 40% of their revenue is from fish, 20% from vegetables. Now, I don't know a ton about the frozen food market. 40% of revenue from fish, that seems pretty high. Now, going back to their investors page, I see they have presentations here. And actually, they have quite a lot of presentations on their website. Most companies won't keep really old presentations up on their site. I do like it because I like to go back and see what they were saying years ago. And with some companies, that can be a little bit difficult. Let's take a look at this most recent presentation presentation. All right, nice tasty looking meal right there. And right here we see revenue growing really nicely, up 6%. That's basically what our sheet showed, 6% growth on the top line. Everybody loves a good old graph up and to the right. And here on the next slide, they say, we are a leader in this space. Unilever may have slightly more sales, but that's basically all ice cream. In terms of European frozen food companies, it looks like their main competition is Dr. Oetker, I want to say, and McCain. Now, a real quick note, I like investing in market leaders. Typically, the largest company in a space has certain advantages. They have scale that often drives better margins. It doesn't have to be a large company. Sometimes a market leader can be a very small company, but it so happens that the market that they're in is tiny. Nomad Foods, we see, is about a $2.5 billion company. So certainly not a large company by any means, but still the market leader in their space. And actually, I'm wondering, because they're a British company, I assume that because they're on a US exchange, they would be reporting in dollars, but they're probably not. Yeah, they're reporting their financials in euros. So I need to convert these currencies to dollars. I do have a currency conversion tab. I'm just going to copy these over into my sheet. I do now need to update once again. Sorry about that. Okay, now we're good. I should have checked that at the very beginning. Back to our corporate presentation, we see that it looks like they've been acquiring companies over the past decade or so. That's not necessarily a bad thing, but we want to keep in mind that some of this revenue growth might not have been organic, meaning we can't assume that the company is going to grow, 6 or 7% organically going forward and give us a 12 or 13% free cash flow yield. Because in order to have generated this growth, you need to use your free cash flow to buy a bunch of brands. Anyway, going forward, it seems they think frozen food is kind of a secular trend, which means that they think there's a tailwind here. They think that more and more consumers are going to move towards frozen food. It's interesting they bring up air fryer ownership. A lot more people own an air fryer now. My wife and I got an air fryer 3 or 4 years ago, and I have to say that I love the air fryer. I wouldn't have instantly made the connection between air fryers and frozen food, but I actually do think that I agree. Once you have an air fryer, frozen food is actually not too bad. We've cooked frozen salmon in an air fryer. It's pretty good. So it looks like Europe's frozen food growth has just been outpacing total food very slightly. This really isn't a big difference. I'm not sure it's significant. That's maybe something I want to look a little more into. Here's something interesting. Frozen food consumption in Europe is way lower than the US. And I suppose what they're trying to suggest is that there's a lot more room for growth in the European market. I think I am going to move on for now. I don't want to make this just a video about Nomad Foods. It's more about how to analyze. And typically at this point, I would go to their most recent earnings presentation and I would want to either listen to or read the transcript of their earnings call. Here, they're going to highlight the numbers. And we see organic growth is down for this quarter. Earnings are down. They are returning a ton of cash to shareholders in the form of buybacks and dividends. And actually, that's something I noticed on this sheet is that look at these shares. Shares outstanding dropping a ton in the past 5 years. I mean, they were almost at 200 million shares outstanding, now down to 155. If they continue that, that would be huge for the stock. Okay, they're saying growth is strong. I want to see if they give guidance. Now, most companies will give guidance for the next quarter or next year, but not all companies do. Okay, look at this. Updated 2025 guidance. So they're saying organic growth is going to be low. Earnings of a little bit more than $2 a share US, which at the current price today, that's only like 8.5 times earnings. Now, as I said, I like to go and find a transcript of the conference call. The most interesting part on these calls to me, it's not where they're just talking about their company and how good they are and how they just, report their numbers to you and then they say how awesome they are. I do read through this, but I think it's going to be a little bit boring for this video. I like to go to the analysts who are asking questions. This is where all the good stuff is at. You often get some insights from the question and answer that you wouldn't get otherwise. This analyst asked, just want to follow up on the question of being able to pass pricing through. So I'm guessing management talked about their expenses increasing, costs going up, and obviously they would want to offset that by increasing price. Now, once I finish going through a transcript, if I'm still interested in this company at this point, I like to read the thesis of other investors. Now, Seeking Alpha is a great resource. Obviously, people write articles on there. You also could just search the ticker on X. You might find people presenting their thesis there, although you'll probably find a bunch of junk too. My favorite place to go, though, is Value Investors Club. Which, by the way, I see they have a recent write-up of Kronos Group. I mentioned this in a recent video. I'll probably want to read this later. Anyway, Value Investors Club, they have a lot of great write-ups about a bunch of companies. And if I search Nomad on here, we see that it was last written up in 2021. So it's been quite a long time since anyone did a write-up on this company. But still, I want to read this thesis. I'm going to read all the other ones too. I want to know what they saw in the company. I want to know what they liked. Clearly, this person wanted to go long on Nomad at $31 a share, and now it's only $17 a share. Maybe there's there's a flaw in the thesis, or maybe the stock just got cheaper. Now, I'm not going to go through this whole thing right now. I don't want this video to be too long. And besides, this is really more about how to analyze a company. And I want to hit all the important things. And the next thing I always like to look at is the ownership of the company. Does management have skin in the game? Is it founder led? And here we see insider ownership is actually extremely high. The two founders both have very large stakes in the company. I love seeing that. Also, this guy is the current CEO. He owns $70 million of stock. This is a huge green flag for me. I love to see that management and the founders are aligned with us everyday shareholders. So honestly, Nomad Food is checking a lot of my boxes. Once I feel comfortable that I understand the company well enough, I try to make a forecast about the future to see what I can expect for a return for this company going forward. And frankly, right now, even though it's a very simple company, very easy to understand, I don't feel like I've done enough work to put in numbers here. But just for illustrative purposes, let's say that I decided that I thought the company would grow the top line at about 4% every year for the next 5 years. And I thought margins would stay basically where they are now. And its multiple would stay basically where it is now, about 11 times. I would be looking at a 20% annualized return every year for the next 5 years owning this stock. That would be absolutely fantastic. So I'm definitely going to add Nomad Foods to my watch list. I'm going to keep an eye on this company. I'm going to read through all those things that we just skimmed over really quick in this video. And I just want to mention before we end, I have a checklist of questions that I ask myself before I buy a company. And I think that everyone should have questions to check yourself before you make a buy. Again, I don't feel like I have deep knowledge into this company, but just to go through, can I understand the company? Yeah, this seems like a very simple company to understand. Is revenue growing? I'm going to say yes. It's very low growth, but it is growing. Can I predict the earnings and cash flow? This actually seems like a company that would be very easy to predict earnings for. Are current earnings normalized, not inflated by temporary tailwinds? We don't want a case where earnings look great now, maybe because they're benefiting from some supply shortage or something else. I'm going to say they're not inflated. Are companies' earnings independent of commodity prices? For this company, the answer would be yes. But now if a company gets a no, if a company gets a red flag on one of these, it doesn't mean we don't buy it. It just means we have to understand that risk. I mean, there's lots of great companies where their earnings are very dependent on commodity prices. Maybe some energy companies, maybe some copper or gold miners. Just because earnings are dependent on commodity prices doesn't mean it's not a buy. It just means we have something to understand. I need to understand that risk. Is debt reasonable? Is balance sheet healthy? The debt is rather high for this company. I'm going to say no for right now. Do maturities on the debt seem manageable? This question forces me to look at, okay, so they have $2 billion of debt. When is that debt due? Can they actually handle the repayment? Am I worried that they might default on some loan? So that would be something to look into. Does the company put its shareholders first? Yeah, they return a lot of capital to shareholders. I'm going to say yes. Does this company have a wide moat? Does this company have any moat? I'm going to say no. Frozen food, I don't think the moat is wide at all. Has management been good allocators of capital? I'm not sure. I'm going to say meh for right now. Is the business safe from low-cost overseas competition? This is a really important question. Some companies look like they're deep value, but if their product can be produced at a lower cost, say in, Indonesia or wherever, and shipped over, their market share may not be safe. For this company, I think the answer is probably yes. Is this company Google and Amazon proof? I don't love investing in things that have to compete with Google and Amazon. They might be a buy, but it's definitely something to look at. In this case, yeah, frozen food, you're good. And then I have a couple questions about valuation. Can you handle the ugly bear case? We didn't do this here, but I always try to put in a bear case that I think is really quite pessimistic, quite negative. I don't know this company well enough, but let's say I decided that in my bear case, revenue is going to decrease 4% every year for the next 5 years. Margins are going to come down from where they are now, and the multiple is going to compress to just an 8 times multiple. You'd be looking at losing 9% of your money every single year for 5 years, which is not something that I would be able to tolerate, so I would say no. Now again, maybe when I do work into this company, I might say, this case is ridiculous. The numbers for my super pessimistic case are not going to be quite this bad. Who knows? If I think in my pessimistic scenario, if I'm close to flat on my money over 5 years, I consider that a win. I'm going to be wrong about some of the stocks I invest in. That's an inevitability. I just want, when I'm wrong, when my bear case is the case that ends up happening, I don't want to lose too much money. Anyways, this is the framework that I use when I analyze a company. If you got something out of this video, subscribe to the channel. We passed 300 subscribers on here, so thank you to everyone who has watched a video, and thank you to the user who recommended I look at Nomad Foods. This is a company I'm now interested in. If there's something you want me to look at, leave it down in the comments below. And also, if I said anything in this video that you agree with, that you disagree with, let me know that in the comments as well, and I hope to see you in another video.